Trump's decision to hike tariffs on imports of Indian goods to the US from 25% to 50% hurts sentiment, with investors hoping for an early resolution of the differences. Metals, auto and energy are the big drags.
Eternal sees large block trade of 5,600 crore rupees, with Antfin likely to be a key seller exiting the stake in the company, while Kotak Mahindra Bank too sees a prominent investor selling shares worth around 2,000 crore rupees via block deals.
Exporters across sectors like textiles, engineering and gems and jewelry point to a standstill on exports after US announces a 25% additional tariff. Some even see order cancellations and fear a shift of orders to other nations. All hope for a speedy resolution of India's differences with America.
Sources tell CNBC-TV18 that India is looking to use the 21-day window before the additional 25% tariffs kick in to try and negotiate a solution. This even as the Prime Minister states India will not succumb to pressure and compromise the interests of its farmers following Trump's raising India tariffs to 50%.
Bajaj Auto MD Rajiv Bajaj sees exports scaling back to its earlier peak of 2 lakh units a month soon. He also expects use of low rare earth metals, helping it to meet the year's target for EVs. A slew of launches, including the new Pulsar and its e-rickshaw rig, will only add to the mix.
Hello and welcome to Halftime Report, live from the CNBC-TV18 Motilal Oswal studio. I'm Ekta Batra, and with me is Mangalam Malu as well as Vinny Motiwala. Well, it is turning out to be a day definitely where we are seeing pressure on the markets, and that was expected to happen considering the tariff news overnight. So we have the Nifty, which has slipped below 24,500 as we speak. We have the mid-cap index, which is down around 1%. And important to point out that it's not only today where we've seen the pressure come through in the markets. On a year-to-date basis, now the Nifty is up around 3%, but the mid-cap index is now in the red on a year-to-date basis with a cut of around 1.6%. So let's see whether the next few days could probably reverse that and reverse the news with regards to the tariffs. But as of now, weak as we speak. In terms of stocks, lot of stocks in focus today. So we have a lot of results coming out today. BSE, Biocon, Cummins India, Godrej Consumer, Metropolis, a couple to watch out for. And stocks in focus on account of numbers today include Trent, Hero Moto, BHEL, to name a few. Hi, guys.
Hi, good afternoon. You know, we have seen some weakness in the market, understandably, because of the fear that was. But the interesting part is that a large part of the street were expecting some sort of recovery to happen, just the way it happened the last time. The first 25% was announced as well. But now the Nifty is broken below lows of that day itself. 24,471 was the low, what I remember, on the day the first 25% along with, the penalty was introduced. But today the Nifty is below the 50-day moving average, the 100-day moving average and the 20-day moving average. The broader markets paint a scarier picture as well. And we have the India VIX, which is spiking up as well. So all things are pointing towards some sort of weakness. Let's see whether in the second half of trade or not we see some sort of recovery, because then you'll have the expiry factor playing out as well.
Absolutely. Hi, guys. Good afternoon. But, some bit of a green that I want to highlight. PVR Inox, yesterday they reported their numbers. After that, we are seeing today also it's managing to hold on to some bit of gain of almost 3%. And because of that, Nifty Media is the only sector as of now that's managing to hold on to some bit of a green. PVR Inox, 3% gains. But like we're talking about numbers right now, Keystone Realtors, they managed to report their Q1 numbers. Good set of numbers that came in Q1 FY26. In fact, the company saw its best ever Q1 pre-sales and achieved the 57% of its launch guidance already in Q1 FY26. Now, what more is lined up for the company? We have the management, Boman Rustam Irani, the chairman as well as managing director at Keystone Realtors, joining us to give us more details about the outlook. Mr. Irani, good afternoon, and thank you so much for giving us your time. Let's start by talking about this guidance of yours, right? FY26 seems to have started on a strong footing. Guidance you've given for pre-sales is 4,000 crores. This quarter, pre-sales come in at 1,068 crores. Your launches are at 4,000 crores. Project additions are also quite good. Now, what should we be expecting? Should we expect an upside in that guidance as well? What is the target?
First, let me thank you for calling me on your show. Secondly, let me revel in the moment for a little bit before I give further guidance. We are extremely pleased. They say pleased as punch with the way the year has started. We've achieved more than 25% of our guidance for pre-sales. And normally, I mean, why this is so important is because normally the first quarter is always the slowest quarter. And then, it starts building up, especially in Mumbai and Maharashtra, with Ganpati now in August, etc. So our second quarter will be even a little more bumper. And that's what we're counting on. I'm not making any future guidance right now, but I promise you I will after the second quarter results. And, what added to our entire team's morale was we closed 1.25 times the kind of projects that we had said we had given guidance that we would close or get for the entire year. We've given a guidance of 6,000 crores. We've already locked in projects of 7,700 plus crores. And another interesting part, in the first quarter, we've had launches of close to 4,000 crores. Now, all these three are a first time. And I think our team is well poised to take on the year. If you remember what I had said in the earlier, when I gave my earlier reporting, that Rustomji is at an inflection point, and we are very well proving it. From here, we see a huge upside happening for our sales and our production.
Okay. Mr. Irani, thanks very much for joining in. Just wanted to discuss demand, but I'll come to that in just a bit. First, I wanted to address the redevelopment projects that you have. Around 11% of your sales come from redevelopment. Tell us, is the momentum slowing when it comes to that? Because we do understand that there are a couple of projects which have been cancelled when it comes to redevelopment. It's becoming even tougher to get consensus right now. Is that a space which is slowing, and your guidance there?
With all due respect and with all humility, I want to say this, that basically people who don't know how to go about the process were jumping in, and everybody was making higher bids. And that was becoming a little bit, I would like to say, unnecessary for our market, right? And of course, this is like when you give a higher offer, everybody wants to go for it, and it becomes the norm of the day. And of course, over a period of time, if the markets don't sustain, then you see people backing off, or you see people, trying to cut corners, or people just saying, look, we can't do this, and then the society is backing off. And you have to understand, society is not one person. It's an entire, other than the committee, there's an entire general body that finally takes the call. And when you look at that, this general body has to be kept aligned, it has to be kept focused, it has to be kept together. And that can only happen if you stay in line with what you have assured in the first go itself. So be very, very clear that we at Rustomji are someone who handles the entire process end to end by ourselves. We do not work with external agents to try and get us the proposals. And that really helps us, because we are the ones who are giving the proposal. We are the ones who are holding the hand through the entire process. And we are the ones who are giving delivery. And lastly, again, over here, I'd like to say that some amount of credit is given to our history, where we've completed more than 2,000 families in the redevelopment space. And, most of the places that we go to, we tell people that you can go to anyone's house and ring a bell and check on the Rustomji credentials. And they do so sometimes. And they get great responses, which is what really helps us continue to grow in this space.
Right. We take that point, Baman, and, to your credit, Rustomji has done fairly well in the MMR region, especially in the, the positioning that you are at. Just wanted to know a couple of things from you. One is there any problem with demand in the very near future? Because there are a lot of builders, looking at the Mumbai market, some looking at the high luxury, premium, and, the relatively affordable, what it can be in the way Mumbai is right now. What is your sense of demand out here? And beyond Mumbai, I was in Nagpur over the weekend. I heard a couple of murmurs of Rustomji projects coming out there as well. So are you looking at places outside of the MMR?
Let me start off by assuaging you and telling you we are a largely Mumbai or MMR-centric developer, and we will stay so for a very long time to come. One of the reasons we do that is because of our belief in this market itself. This market is strong, it is deep, it is wide, and we are developers from this market. We understand the pulse of this market, and we are able to kind of maneuver our way through most of the issues that other people would be facing, when they get over here. Secondly, yes, it's true, we've entered Nagpur, and it's a very small play in Nagpur as of right now. The total project size is about 1,000 crores GDV, and our investments are no more than 22 crores or so as of right now. We're looking at launching that project either in this financial year or then early next financial year. It will be a learning. We will set that vehicle up. And if it does well, we will continue to be there. Nagpur, of course, has got great infrastructure. I see that market growing, maybe not at the pace that we are used to, and then we will decide about that. Thirdly, you spoke about the demand. And let me tell you, demand is a yes and a no. There is a whole host of developers coming in, which is, let's say, spreading some amount of thoughts that there could be a slowdown. But if you look at the sales quarter on quarter amongst all developers, they've been extremely strong. So what really is happening is with the growing infrastructure, the growing demand of this beautiful city, and with the number of new commercial buildings coming up out here and the number of new offices locating themselves out here, I think this demand is bound to continue. And builders have been extremely rational this time. There has been no like some parts of the country, there has been no jump in prices. So prices have been controlled. I think this trend should continue for quite some time. I don't think we are anywhere near a worrisome situation.
Okay, all right. We're going to take that positive guidance forward. Thanks very much for joining in. I'm sure the dynamics in terms of demand could probably even change with regards to what's taking place with tariffs, but we'll know the impact only after a period of time. We'll take a short break, but we'll get back with the management of Pidilite on the other side to discuss the quarter gone by. Stay tuned.
Welcome back. Just keep an eye out on a couple of stocks. There are signs of some buying at lower levels for the frontline index, and it's visible more in the Nifty as well as the Nifty Bank, more so on the Nifty Bank. So pull up the Nifty, it's mildly off the day's low by about 20-25 points, and you have the Nifty Bank as well, which is now sitting with a cut of about 230 points, which is slightly off the lows of the day as well. What is the common element between both of them? HDFC Bank. Just pull up that intraday chart and you would see that HDFC Bank has now moved fairly into the green, currently seen a recovery of nearly 2/3% from the lows and has moved to the high point of trade. The other couple of stocks which are doing well are the IT stocks as well. So if you pull up, the IT index, you would see that there has been a recovery of almost 0.5% from the lows on the IT index, just about breaking into the green as we speak, and that's on account of TCS and Infosys. So if this continues, these two are fairly decent weights on the frontline index, and given the shorts in the system and the kind of call writing that we've seen at 24,500, there could be a case for some sort of short covering, but for that we'll have to watch out for the market very, very closely. Amidst all of this, there is management that is lined up for you on the show today. Pidilite, consistent good performance continues in the first quarter as well, a healthy volume growth of near double digits. And we have the management with us. Sudhanshu Vats, who's the managing director of the company, joins in now. Sudhanshu, it's consistent near double digit volume growth as you've been guiding, even in a tough consumer environment. But now, as we hear from all the other consumer companies, things are improving. Do you think from here on you will do even better? Could you give us a sense?
I think Pidilite, as you rightly pointed out, has been delivering consistent underlying volume growth. And I think we've done that when the demand situation was a little tight. Even in the quarter gone by, the demand situation was slowly improving, but we've delivered a double-digit underlying volume growth with a revenue growth of about 10.6%. I think as the situation continues to improve, we remain equally buoyant and we will get advantages of that tailwind as and when it comes. So it should be able to lift it further as we go forward. Because as far as we are concerned, Mangalam, we are here to continue to strengthen our portfolio. We do a lot of work with our users and applicators, and we do that very consistently and on the ground and month on month, actually day after day, month on month, year after year. And we continue to bring in innovative, user-friendly solutions, and therefore that innovation in terms of our product pipeline, in our user marketing, and our focus on distribution and continuing to be pioneering in our approach will always help us.
Okay, that's surely interesting to hear, Sudhanshu. But what about the overall margin trajectory? This time you've seen a 100 basis point improvement there, even revenue growth of around 10-11% this quarter. What are we watching out for the full year?
I think when we talk of our EBITDA corridor of 20-24%, first of all, these numbers should always be looked in an annual context. As you know very well, that Pidilite business has seasonality. Our quarter one tends to be a much higher quarter compared to the other quarters that follow in the year. So therefore we have, and especially for waterproofing business and some of those other things. So I think what you are seeing is our corridor of 2024 remains. Now, if you look at this 25.1% EBITDA margin that we've delivered at consolidated level, there is an advantage which will go away, which is that ANSP is a little subdued and percentage ANSP even more so because of the seasonality. We do ANSP or advertising based on what the brand and the business requires in that quarter. We don't manage it quarter to quarter. So therefore, that keeps going up and down a little bit, and that will change. And there is an advantage of that in this quarter as you see the numbers. I think the place where we will continue to see a little bit of advantage is that input costs currently are benign, and we see that scenario at least in the short to medium term, 3 to 6 months out. We are also beginning to see slightly more scale leverage as our volumes grow. So we've delivered an underlying volume growth of 9.9%, but our total volume growth is far in excess of that, a factor of 2 plus actually. So therefore, the scale leverage as we continue to grow our business will continue to come to us. Having said all of this, we stay steadfast on our guidance on EBITDA corridor of 20 to 24%.
All right, 20 to 24%. You've spoken about double-digit revenue growth. Can you break that up for us, both for your B2B and your B2C business? Because if I remember correctly, last 8 quarters, B2B business has been doing double-digit volume growth, and it's actually outpacing the B2C vertical.
This is the 8th straight quarter of B2B business delivering double-digit volume growths, underlying volume growths. We are confident of sustaining that. We are seeing considerable momentum in our projects business, part of the B2B business. We are also seeing good momentum in our joinery business, which is basically the off-site furniture making piece, which is there. So we are seeing very good business there, improvement there. I think what is very heartening in the quarter, which is now here, and I think is somewhat reflective of improved demand situation you are talking about as well, is that our consumer and bazaar business has also delivered a 9.3% UVG Mangalam as I speak to you. And this is indeed one of the best consumer and bazaar performance in the recent quarters. So I think, so that lift is coming in. B2B will continue to remain strong. So as far as our UVG is concerned, Mangalam, for the quarter that has happened, what I'm very happy to report, it is a UVG that we've delivered across regions, across categories, and arguably across most products. So it's a very wide 360 kind of a performance, which is very heartening as we move forward.
Okay, all right, fair enough. So if we are seeing some pricing growth and double-digit volumes, can FY26 have low double-digit teen revenue growth?
So underlying double-digit volume growth with the margin guidance we spoke about. And I think you are already seeing a little bit of between 70 to 100 bips of pricing that is different now as we go forward, as we have come out of that cycle of having passed on all the prices. So yes, you are right. We could see as we go forward, if the demand strengthens, we will continue to see an improved performance from Pidilite. And I think what is very heartening, and I think for the quarter that has gone by, this gives me a lot of confidence, is despite all the global macroeconomic situation, the entire confusion around tariffs which has prevailed, and also the results which I've seen up to now of many large listed entities across sectors, I think we've consistently delivered. And as a matter of fact, we've upped the ante a little bit. We've delivered a strong underlying volume growth and a good revenue growth at good profitability.
Point taken, Sudhanshu, but do you think that tariff-related uncertainties could impact the raw material prices, or is it already baked in?
I think the raw material prices, from what we have seen, continue to remain benign. I think there could be some supply issues or managing those issues, but we are adapted that. I think how do you sort of plan for it? I think those are things which we will keep in mind. Our direct exposure to US in terms of tariffs is very, very low, as you know. We do export a little bit to US, but it's very small as far as Pidilite is concerned. There is a little bit of cascading impact of it on industries that export quite a lot, and particularly in our B2B business, industrial business. But I think we should be able to manage it as we go forward.
All right, you should be able to manage it going forward, so that doesn't, bring any more uncertainty. Let's talk about the two new businesses. One is the paint business. How's the performance of that been like? Can you give us, any specific numbers out there? And the early response to EVs and electronic adhesives, in which you have announced a foray. Could you give us a sense of what your total addressable market here is?
On Haisha, the good news to share with you is that we are consistently growing quarter on quarter, month on month, across the 5 states, largely southern states, where we are there, where our pilot is happening. We are focused on rural and small town India, and I think we will continue to remain focused in that space. So the good news is that we are growing month on month, quarter on quarter, but I think we still need to do a lot more work on fine-tuning our business module, establishing a clear right to win, and what more work we need to do with users, the classic Pidilite mantra and our DNA, as to how do we become better at that as we work with the applicators, even in this space, so that we have a competitive advantage. So I think we are going to fine-tune that for some more time before we fully scale it up, but the progress is good. That's on paints. I think on electronics and EV, once again, we basically now are in contact with, or as I speak to you, some of our products are getting specified or sort of are getting tested for specification, more accurately, along the large electronic manufacturing services, EMSs, contract manufacturers, and many EV players as well. So I think we are making good progress. In the quarter that has gone by, I can share with you, we won one additional large EMS account, and that's heartening. This is a journey we've got to stay steadfast on, Mangalam, and I think we will build on it slowly but surely. And I think this is a big opportunity, which over a period of time will play out as we go forward.
Okay. What's the TAM for electronics adhesives? Have you put an aspirational target there?
So I think if you look at the electronic adhesives market, the way it could go to 2030, assuming a lot of manufacturing comes into India, it will be a sizable market. But I will be a little careful in giving a number, especially at this juncture, with all the discussions happening on global tariffs and how this will eventually play out. So therefore, it is a sizable number, though, I can tell you. It's an attractive, sizable number, where there will be multiple players, because it's also a very complex space, even for anything. Even if you look at mobile, the number of additional places, thermal padding and all that which you need to do. So we will be one of the formidable players in this space, but there will be many. And I think, both international and perhaps a few local. But I think that's the place we are very watchful of. It is a large market, potentially a large market as we go forward.
Okay, all right. We're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's the management of Pidilite saying that the demand situation did see a marginal improvement in Q1. And the stock, as you can see, just about higher by around 0.2%. We need to take a short break, but as we do that, a short note, remember to tune in to the all-new CNBC TV18 Prime, bringing you insights from policymakers, business leaders and economists, shaping both the world and India's future. CNBC TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune in to CNBC TV18 Prime at 12 noon for the Global Reset, at 1 p.m. for the Big C, and Global Lens at 8:30 p.m.
Welcome back to Halftime Report on CNBC TV18. Not much of a recovery that we've seen come again in the market, so that is something that we'll be keeping an eye out on. But a lot of stocks that are moving in trade as well. In the last half an hour, or we've seen eClerx, Shobha that have seen a recovery. But which are these other buzzing stocks? What is the reason for their move? We have Vivek joining in with us for that.
Well, thank you so much for that, Vinny. What's actually transpired in the last half hour or so is that stocks from the broader end of the markets have seen a bit of a recovery. A couple of stocks, from the power space. The first one has to be CESC. Now, yesterday, a very important development as far as the SC verdict is concerned. And so power stocks who have Discom franchisees stand to gain significantly. CESC up over 4% on the back of that. Fortis Healthcare, very strong margin expansion in the quarter gone by. That particular stock, one of the top gainers, cooled off a little bit from the day's highest points. Select mid-cap companies, especially in the last last hour have seen a bit of a bounce back. Coforge almost higher by 2.5%. And ICICI Lombard, very sharp recovery from the day's lowest points. Sources indicate to us that a motor TP hike may be on the card soon, and that particular stock has recovered quite sharply. On the other hand, quite a few laggards as well, especially names from the chemical pack. Exporters over here are ones that will face the significant higher tariff, and on the back of that, SRF down almost 3%. BHL, very weak quarter. This particular company execution has been very muted despite a strong order book, down by over 6%. GNFC, this particular stock, top line has fallen almost 20% on a year-on-year basis, down 8%. And Prince Pipes, again, for this particular company, a muted quarter, across all parameters, it's been a miss, and that stock down by over 8% today.
Okay, all right. Thanks very much, Vivek, for that. So a lot of stocks buzzing around today, and especially towards the close of the earnings season as well. Aditya Agarwal now joins in to tell us what he's tracking technically today. Aditya, hi. It's a busy, volatile weekday, you'd have to say, for our markets. So in the midst of that, what would you recommend in terms of a call on the Nifty?
Hi, good afternoon, Ekta. Thanks for having the show. My sense is markets are still trying to find its feet. It's more of a consolidation and a slow grind on the downside. Slowly and steadily, we are heading to 24,400. And my sense is you could see a more of time correction rather than a price correction, because as and when the news flow on tariff is trickling in, markets trying to just digest that and have it in its stride. And the good part is it's not correcting big time. It's a slow grind. Some stocks are correcting post results, but on the Nifty per se, I don't see a major fallout and a correction that I foresee in the markets. It's a slow grind. I see 24,400 as a good support for the market as of today, and for the next week as well. My sense is we could see actually a short covering rally in the Nifty, and that could be led by Bank Nifty predominantly. My sense is you could see 55,500, 56,000 levels on the Bank Nifty in the 1 or 2 weeks of trading session that is left for August. And for Nifty, I think you could also see a bit of a bounce back and a short covering rally from current levels. Once it starts to trade beyond 24,500, 24,600, it can test levels of 24,800, about 25,000 as well. So I'm not that bearish right now in the market, given the fact we've already corrected from the peak. It's more of a consolidation that I foresee for next 1 or 2 days, and maybe next week onwards, you could see a bit of a short covering rally in the market.
Okay, and Aditya, which are stocks that you're keeping an eye out on?
So Vinny, I've got a couple of stock recommendations that are looking interesting for buy side. Because clearly I wouldn't be looking to short the markets. I'm not going short on stocks as well. The first one is DMart. This is one stock which has outperformed and bucked the trend post its numbers and then has shown strength breaking out of a narrow consolidation phase. So at current levels, there'll be a buyer in DMart, which is Avenue Supermarts, for a target of 4,500 on the upside, with a stop loss on the downside at 4160, 4170. The second stock on my radar is Hero MotoCorp two-wheeler space. Again, more of domestic-focused companies are outperforming. So Hero Moto is also looking interesting. After a long consolidation, stock finally broke out and headed higher. So at current levels, there'll be a buyer in Hero Moto for a target of 4,900 on the upside, and place a stop loss somewhere on the downside close to about 4,400.
All right, take that point. Thanks a lot for that, Aditya. Let's go across to Nigel now. Nigel, for the setup, we are seeing market making attempts at recovery, but is there any insight?
Well, that's right. Mangalam, the structure is really weak. But I tell you what, this 100 EMA is proving to be a very, very important market. Comes at around 24,453. So I think on a closing basis, actually, you want to defend that mark, the 24,450, because otherwise the 200 DMA comes into reckoning. And that's at around the 24,000 odd mark. So this is a very, very crucial band between the 100 as well as the 200 DMA. Now, various arguments whether or not this market is oversold. The answer will have to be yes. Why do I say that? In the near term, you should see some kind of a pop. Why is that? The PCR has moved to around 0.69 the last time I checked. So that's point number one. The FI not short positions are at the highest in percentage terms all the way since March 2023. But the third factor is the RSI. Normally at around 30 odd is when you see it in the oversold zone. For the time being, it's hovering in that vicinity of around 37, 38. So that's the only factor, that's pending in terms of moving to an oversold level. Otherwise, both the other two, they're closer to the range where you do see a bit of a bounce. The problem is today's expiry day. So there could be some kind of volatility in the second half of trade. And the options data is looking very, very interesting because the bears believe they've got this covered. You look at the 24,500 call, just take a look at the premium. From 120 rupees, it's come to sub 15 rupees. So those call writers, well, they're well in the money. For them, till the market holds on to the 24,600 mark, they're very well, protected. As is the case with the 24,450 call as well. Out there, the premium has dropped from around 160 rupees to around 24 rupees. So those call writers as well, they are safe till 24,600 level is holding out. So that's a crucial mark. On the downside, there is some buying that we're seeing at around the 24,400 put. The premium in the vicinity of around 16 rupees the last time I checked. So there is a bit of a punt in case this market does see a big downtick in the last hour or so. That's the put writing that we're seeing out there. Levels to track for today, I think the high and the low of the day become very important. The high of the day is around 24,543 approximately, so that's going to be important. On the downside, the 24,387 is the important mark. So we'll keep an eye out on both those two marks. You want the Nifty to get past either of those levels to give some direction. And finally, the tech index, that's shown some kind of resilience actually in today's trading session. Though the globe is in a bit of a flux, that one actually has almost moved into the green the last time I checked. So interestingly poised, expect volatility in the second half of trade. But I'll tell you what, that PCR is getting to a level where you should see a bit of a bounce. Back to you.
Okay, all right, Nigel. Thanks very much for that. So that's on the F&O update. We need to take a short break with the news that the markets are still weak. We have the mid-cap index, which is down around 500 points at this point in time. So definitely trending on the weaker side. Sri Lotus developers, do watch out for that stock. It's showing a good amount of volumes this afternoon. So at around 200 odd rupees, the stock is up around 2.5%. We'll take a short break. On the other side, Manisha Gupta will join in. She has with her Colin Shah of Kama Jewelry. Stay tuned.
Welcome back, and joining us on the show now is Kama Jewelry's Colin Shah. Colin, hi, thank you so much for joining in. Clearly, from all my conversations with the industry, 10% was a concern, and then came 25%, which is effective today. And there is this 50% that gets effective in next 21 days. What is the sense that you're looking at in sense of exports to you as the biggest market for jewelry as a sector? How have the numbers been in the previous quarter and even for the month of July?
Thanks, Manisha. So, crisis time, once again, I guess for our industry, it seems like, lockdown number one once again. But our 3-year average exports to the US have always been $10.5 to $11 billion, with April, May, June, the quarter one being approximately at $3.5 billion. April, May, June, already because of the tariff impact, are at 1.5. So it's been 50% below the 3-year average. So we've already been at that level. July also has continued to trend at that. And the guesstimate from the industry, I guess veterans and analysts, is that August to March will be another 75% down if the tariff situation continues.
Tariff situation at what level, 25 or 50?
To be honest, even if it's 25 or 50 on natural diamonds, lab-grown, gemstone, plain gold or studded jewelry, it's an unviable level. 25 plus 6% duty makes it 31-32% effective rate, which is already higher than most of our competition, which is Thailand and Vietnam and other countries. So at this high level, we will have a severe drop and loss of business to the other countries. And if it's at 50, I don't think we'll have exports more than $2.5 billion annually to the US.
Colin, the expectation is that perhaps we wouldn't have to see 50 because the conversations will begin in the next few days, and we have 3 weeks of a time to negotiate all of this. Having said that, as you mentioned, there are other countries which are already competitive, and India will be losing. It wouldn't happen today, August, September, October. It would take time before we can even start negotiating that 25%. What are the other markets during this time that India is eyeing and working upon?
What India should eye is, if you take the top 10 GDP nations, I don't think, we don't have bilateral trade agreements with, I would say, most of them. So it would really help if new markets are opened up like Brazil and Russia. I would name those two countries as, not Russia, China, I meant, sorry. China and Brazil would be, I guess the top two markets. China is already, after US, the second largest export market for our commodities. And if that could be opened up because it has high tariffs, and the Chinese economy, though not in the best shape, is still the second largest market. So if China and Brazil and South Africa could be opened up, I think that would really help our industry de-dollarize a little bit. I don't think overnight, we can replace half our exports, but at least inroads could be made in the next couple of quarters in these new markets. And of course, EU has been, on the anvil since a while now. UK has happened. So if the EU, I guess BTA also happens relatively quickly, that would also help, our cause.
Colin, I remember speaking to you earlier part of this year, and you said the previous couple of years were not so great, but this year seems to be stabilizing, and perhaps we could be looking at better numbers. We did not account for tariffs at this point in time, and not at these current levels. Would you say 2025, in that sense, yet again could be a weaker one for the segment?
Yeah, 25 now, in light of everything which has happened, it's going to be like a pandemic kind of year, where unless we have huge government support and new markets opening up, I guess there's going to be a huge job loss in Surat and the SEZs. So we're really hoping that the government takes note of this drop in exports. We are one of the affected sectors. There are many sectors which may not be as affected, but we are definitely, affected in a big way, because US used to be half our exports. So 50% of the market going away overnight is going to have a massive impact. So the long-awaited SEZ reforms, a lot of ease of doing business initiatives which we need on income tax, on customs, on GST, if all that could be taken up on a war footing and could be solved, I would say in the next, 2 to 6 weeks, then that would give some relief to the industry in reducing the job losses. Job losses will happen, but it would help us to, tide over this crisis like we did during the pandemic.
A final word then, and with the festival season and the wedding season, and then you have Diwali, and then you have Christmas, etc., would you say the demand from India and other parts of the world in some sense would ease that pain?
Yes, India would ease that pain to some extent, because many of the manufacturers do have an India business and export business. So yes, India would ease the pain. But what we are a little worried about is in light of what has happened in the last few days, is there's going to be a lot of volatility now on gold pricing. There'll be a lot of volatility on the currency and the stock market. So if we have a little turbulent, currency, stock market, and gold and silver price, then that will have its impact even on the domestic industry. So we have to now, just watch what really happens over the next few weeks between the two governments, so that there is a little calm restored across all markets.
Right. Colin, just before we let you go, you said that there would be a lot of uncertainty and perhaps some job losses as well, pretty similar to what may have happened during the pandemic at that time. Do you think that would have an impact on the prices of gems and jewelry itself by, say, the underlying prices of diamond and perhaps lab-grown?
See, there are, like in natural and lab-grown, there is a certain amount, there are certain clarities and colors which work in different markets. So US typically has been more, on the lower end and promotional kind of diamond clarities. Over there will be an impact. But in the clarities which are consumed in markets like India, China, GCC, Europe, we will have a shortage, because now there will be less rough imported, there will be less cutting and polishing, business viability question for a lot of units. So there will be shortage because there is less production. And that may have a reverse impact on pricing, maybe. But I'm saying it's too early to say, and we will only know how all this unfolds over the next couple of months. We're still hopeful that, like Manisha mentioned earlier, that our government can come to some kind of agreement which doesn't make it completely unviable for the Indian manufacturer to export to the US.
Absolutely. That point is completely taken. And the point about job losses, there will be job losses, but as of now, we don't know the extent. and the extent of the impact. Thanks very much for joining in and speaking with us. So definitely a developing story there. We need to take a short break. We'll get you more on the markets, a lot of stocks in focus on the other side. Welcome back. Well, Lupin is in focus, and this is on our Insight Edge segment where we are talking about what the company has told us and the reason why the stock is higher. Remember that the numbers have already come out 2 days ago. It's reacting to its conference call takeaways, which took place yesterday post-markets, where they have indicated that FY27 management indicated the overall revenue would be in high single digits. Domestic business is set to outperform the IPM by 1.2 to 1.3 times over the next 5 years. The diagnostic business is targeted to become EBITDA positive by FY27, and the margin guidance stands at around 24 to 25%, but could be impacted by higher R&D and lower PLI benefits. Lupin, when talking to us, also said that they should see double-digit growth in FY26. They stick to their guidance of $250 million plus in terms of US sales per quarter at this point in time. They would stick to around a guidance of 50 to 100 basis points margin improvement. We could hear on the mirabegrin litigation, which is a particular drug which is under litigation in the US in the next few quarters. And they are preparing to launch semaglutide in India in the first wave, which is the diabetes drug. And tariffs on pharma would have a significant impact on the US market. That's what Vinita Gupta told us. And they could see inflation in the US, potential disruptions, especially for low-margin drugs. Manufacturing additional products in the US is a part of their mitigating strategy if in case it does come to pharma tariffs. Let's in fact listen in to what the management had to say.
We obviously would like the Tide to do better, but I would stick to that guidance, given the fact that there are a lot of, headwinds also in the form of tariffs and a host of other things.
If there is a 200% or thereabouts, I'd say anywhere from 20% to 200% tariff on pharmaceuticals, it would have a significant impact on the U.S. market per se. I mean, as we've talked in the past, 70% of the drugs in the U.S. are imported. 50% of generics are imported from India. So obviously, high tariff will have an impact on drugs that are imported from India.
Okay, that is the management of Lupin. But on that note, we're going to slip into a very short break. But a reminder for our viewers, unlock a world of exclusivity, expertise and influence. Become a member of CNBC-TV18 Access, our premium members only experience on CNBC-TV18.com. The membership includes access to CNBC-TV18's flagship events, interactions with our journalists, along with curated studio tours, e-learning sessions and masterclasses and curated lifestyle benefits. Welcome back to Halftime Report on CNBC-TV18. Like you can see, the market is where we started the show with 24,400 levels, around that mark, down 0.6%. We have Kaplan Point that has reported their numbers as well right now. Revenue is up around 11%. We see a spike up that's coming in the stock as well. It's up almost 1% now that we were watching out for. Recovered from the day's lowest point. Net profit seeing an uptick of 23% as well. Other than that, in the broader end of the market, we are seeing some of these names like eClerx, Shoba, Craftsman Automation, these have seen some bit of a recovery from the day's lowest point, specifically in the last 1 hour that we're seeing an up move coming in for these stocks. So keep an eye out on that. We'll see where the market is headed in the second half of the trading session. As of now, not that we're seeing any sort of a recovery that's come in. But with that, we're absolutely out of time on this edition of Halftime Report. Thank you so much for tuning in. Up next, your Business Lunch will take you through all that market action.